Good afternoon, everyone, and welcome to Pension Awareness Month. My name is Catherine Murray. I'm the Training and Engagement Manager from my CSP, and I'm joined today by some of my teammates, Liliana Gonzalez and Michelle Storer, and we're going to help guide you on your journey through your pension towards retirement. Today's session will focus on why it's important to get to grips with your pension nice and early, and we're going to give you a step-by-step guide to your annual benefit statement, or ABS, as well. Today's session is being recorded. It will be available for you to watch again online from lunchtime tomorrow. If you'd like to watch back, if there are important points that you need maybe a little bit more time to digest, then you'll be able to do that. Or maybe you might like to recommend the session to a friend or colleague if you think they could benefit from watching it back as well. And all of the other sessions we're delivering throughout Pension Awareness Month, they're all also available online for you to watch if you've missed out on one of the topics that maybe would be really useful for you to see. So no matter how far away your retirement is, it's never too early to think about it and start planning. And it's a really good idea to understand as much as you can about your pension and how then all the pieces of your retirement income will fit together to put that puzzle together ready for you for retirement. We are taking your questions today, and the latter part of this session will be a Q&A session, and we'll answer as many of the questions that you pop into the Q&A for us as well. So please put any burning questions for us in there, and if you can upvote a question that you would like to have answered rather than asking it again, that will allow us to focus on the topics that you really want us to answer to. So I'm going to now pass over to Liliana, who's going to guide you through the first bit of our session, and we can have a look at some of the benefits of the pension scheme and also look at our annual benefit statement. So over to you, Liliana.
Thank you very much. So welcome everyone to the life event session. So what we're going to cover today, we're going to talk about the retirement living standards first of all. Then we'll talk about setting a realistic retirement goal. So starting to get you to think about what kind of income you might need at retirement. Then we're going to go through your annual benefit statement, which is going to be one of the most powerful tools you have for your retirement planning. The Retirement Modeler is a really good, useful tool to project your benefits to the future, so we'll go over that as well. And boosting your pension is an option as long as you are active in the civil service, so we'll go over the options you have to do so. Then we'll just put all the pieces together at the end and give you some more useful information. So in terms of your dream retirement, what that looks like is obviously going to be personal to yourself. So I want a little farm with a couple of pigs, a couple of chickens, but obviously your dream retirement is probably going to look a bit different. So do you want to travel the world? Do you want to use your time for the hobbies that you have, or maybe pick up some new hobbies for yourself? Some people choose to volunteer. So instead of, just, not working, volunteering instead is another option for those who wish to do so. And you're going to have that time to spend time with the people that you love. So what your dream retirement looks like, of course, is going to be personal to yourself. Now, in terms of the retirement living standards, obviously what income you're going to need is again going to be personal to your circumstances, but this gives you some figures to look at and start thinking about what kind of income you might need to lead the life in retirement that you're looking to have. So you want to consider your household bills, so things like your mortgage or your rent and everything within your house, your furniture and also your food. Obviously, we need to eat. Transportation costs, so your car, do you have a bus pass, do you have a train pass? So just thinking about what kind of cost you need for your transportation. Your holidays and leisure. So obviously everybody likes a bit of leisure activities or maybe going on holiday. So thinking about what income you're going to need for that, and your essentials. So things like your clothing, your footwear, and also gifting and helping others. So you want to consider your own position. So thinking about what kind of income you're going to need to lead the life in retirement. So your rent or mortgage. So obviously that's one of the biggest things that you need to consider. Some people still have children at home. So obviously financially supporting your children. Have they left home or are they still with you? You want to think of your monthly outgoing. So again, all of your bills, any leisure activities, anything like that you want to kind of consider. And yeah, just getting those pieces lined up together just so you know what income you're going to need, and obviously make a plan on how to get that income. So setting a realistic goal for yourself, of course, your civil service pension is going to be a big factor in your retirement, but you want to think about other income you have as well. So you get your state pension, of course, at state pension age, but do you have any other pensions outside of the civil service? So other occupational pensions, perhaps some private pensions, and what other sources of income do you have? Some people have side businesses, some people own property. So it's just thinking about what income you have, and again, making that plan to make sure that you have the income that you need in retirement. So your annual benefit statement is going to be a very useful tool as your career progresses. You're going to be able to see what your pension looks like every individual year. So we're going to go through how to find your benefit statement first and what's contained therein. So you can find your benefit statement on the pension portal. If you've not been on the pension portal yet, again, it's going to be a really good, useful tool to look at your civil service pension as your career progresses. So to get registered for the portal, you'll need your national insurance number, your date of birth, name of your employer, and a mobile phone. All of your benefit statements from 2019 onwards are all online, and the 2023 statements are online as well. You'll have access to the retirement modeler. So again, this is going to be a really useful tool to be able to project your benefits to the future. So again, you can make that retirement plan for yourself. And you'll also be able to update your death benefit nomination on the portal as well. So super important that you keep us up to date with whoever your nomination is, because we do act in accordance with your wishes. So again, your benefit statements from 2019 onward are all in one easy to reach place. So you'll be able to see each year, how your pension's grown as your career has progressed, and you can download your statements as well. So your alpha statement will be on the landing page. You'll be able to see what your annual pension is, and that's on the assumption that you're going to take it at state pension age. So bearing in mind, you are able to take your pension early, but it would be reduced for early payment. So again, any statements, any figures you see there are based on the assumption you're going to take those benefits at normal pension age. So the statement introduction, so this is the first thing you'll see on your benefit statement. It'll give you some facts about what you're going to find in the benefit statement and also where to contact us if you've got any questions, because of course, we do our calculations based on what your employer supplies to us in terms of your pension information. So if you've got any questions about your service or your pay, you want to contact us. So you can either use the email address that you see on the screen, or you can use the contact us form on the Civil Service Pension website, which is probably an easier way to get in touch with us. But again, if you've got any questions about your statements, get those into us, absolutely, so we can look into that for you. So in terms of your benefits at a glance, you'll be able to see what your pension is so far. So again, here you'll see the annual alpha pension and your other pensions as well. So it's not just your alpha pension on your benefit statement. You will be able to see any previous benefits you have in Classic, Classic Plus, Premium, or New VOS as well. There's some useful notes to explain what is and isn't included in your statement as well. So things like transferred in service, previous periods of service that you've had, any added years or added pension that you've purchased, as well as any pension debits for divorce. The amounts do not include benefits from previous periods of service unless you've opted to aggregate those periods. Any additional voluntary contributions that you've made, your ABC provider will give that to you. So the current provider is Legal and General, but we have had historic providers like Standard Life and Scottish Widows. So again, that information would be with them. It also does not contain any pension earmarking orders, so they're applied at retirement. So just having a little look, seeing what the information includes, and again, being able to read that accordingly. So your death benefits are also there at a glance. So you'll be able to see what your anticipated death and service lump sum is and the total survivor's annual pension. So that is the adult dependent pension if you were to pass away. So again, it's good to kind of keep tabs of that. And again, it's for your effective retirement planning. So as I mentioned, death benefit nomination is super important to make sure that we're kept up to date because again, we do act in accordance with your wishes. So in terms of who you can nominate, it could be anyone. It could be your partner, children, mother, brother, sister, friend. It's whoever you want that to go to. You can nominate multiple people, but you just have to stipulate what percentage of the benefits would go to which beneficiary. So you can nominate them on the pension portal, or you can use the form that's on the Civil Service Pension website. So again, if there's any changes, let us know either through the portal or that form. And you can consider a partner declaration form as well. So if you have a partner and you're not married, there's also a form on the website to declare who your partner is as well. So your alpha benefits, this is a really good tool to see how your benefits are actually growing. So as you can see, circled in red, it's the pension that you have as an opening balance. So that's what you've had, and then you'll see what's been added each year. So the green circled box, that £40,000 is what the members earn in this year. So you're able to see exactly how we got to the figure for your pension that's added for each year. So £40,000 times 2.32% means this member's banked £928 of pension. So that's what they've added in that year. It'll also show you what the annual adjustment is. So there is a cost of living adjustment that gets applied to your alpha pension every year to make sure that the benefits, retain their value. And then at the end, you'll see what your closing balance is. So it'll be what you've had, what you've accrued in that year, plus the annual adjustment, and you'll see what your closing balance is, and that's the pension you've got so far. You'll also be able to see any transferred in benefits that you've had. So again, all of that will be laid out, and hopefully that's helped demystify the alpha portion. Now, you'll also be able to see any previous benefits you've had in any of the other pension schemes. So we have people in Classic, Classic Plus, Premium, and Nuva. So you'll be able to see those benefits as well on your statement, and you'll be able to see them separately. It's important to remember that Classic, Premium, and Classic Plus are final salary sections. So what that means is that your pension is still going to be based on your final salary, there or thereabouts. Now, there are specific calculations we perform to get that figure, but generally speaking, again, your Classic, Premium, and Classic Plus pensions will be based on your pay at your last day of service. So as your benefit statements go through each and every year, you'll see your pay change, and that means your pension would change as well. So you'll be able to see what your Classic Plus or Premium pension is, and the lump sum you can anticipate as well. So all of that is there at a glance. So again, you'll have your alpha benefits and any previous benefits you've had as well. So the last pages on your benefit statements are important notes. So some people might kind of gloss over this, but it's really important that you read this information because a lot of the questions that we tend to get from members are actually contained in this bit. So you'll be able to see, what your benefits entail, what is in the statement, and if you think anything's wrong, again, what to do to notify us. So again, really important to just read through your benefit statements, understand what you're looking at, and again, if you've got any questions, make sure you ask. But that is it from me. So I hope that's helped, and I will pass it back to Catherine.
Thank you, Liliana. That was really interesting. It's really good to have that step-by-step guide to the annual benefit statement, to have a look at what all of those figures means. It's one of those documents that we get every year, although all online now rather than through the post. And I think a lot of people sort of give them a quick glance, but don't ever really digest the information that's in there. So it's really good to be able to take some time and actually work through the information that's on there to make sure you understand it. Also important to check that everything on there is correct. And if you think that there's some information on there that isn't correct, then do get in touch with the scheme. The easiest way to do that is using the Contact Us form on the scheme website and raise a query, and that will be investigated for you. Now, don't forget that all of the information around Pension Awareness Month you can be found online on the dedicated Pension Awareness Month pages of the scheme website. So there's lots of information you can refer back to, including all of the sessions that have taken place so far. You'll find the videos of those on the scheme website. We've got lots of questions coming in, so thank you very much for those. We will be answering those towards the end of the session, but don't forget, just another reminder that you can also attend a Pension Power session if you would like to, and attend a smaller session with a smaller number of delegates, which gives you a 1-hour tour of your civil service pension, and any questions that you might have can be answered on there as well. If you'd like your pension information in a different way, the Civil Service Pensions podcast is also available wherever you get your podcasts, and you can listen to our experts and members of the scheme talk to us about their pension situation. It really gives you some food for thought when thinking about topics like retirement. We've got a session on why it's important to think about your pension nice and early in your 20s and 30s. There's really a wide range of topics covered there, so well worth taking some time. If, like me, you really like listening to podcasts, then there's lots of information to be absorbed from that as well. So I'm going to pass you now over to Michelle, who's going to talk to us a little bit more about the retirement modeler, how you can use that, and look into your pension benefits for the future as well. So over to you, Michelle.
Brilliant. Thank you very much, Catherine. And thanks to Liliana. And we're going to build on exactly what it is that she's taught through. So you've seen your annual statements. You've seen that that's going to tell you how your pension is at the 31st of March each year. But how can you build on and understand your retirement options? So also through the portal, you have the retirement modeler. That pulls information through from your annual statement, and it allows you to have a look at potential retirement options and look at what might be best for you to do. So the modeler projects your pension at different retirement ages, so you can have a look at that, and we'll see on the next screenshot to see how you can move that around. It does assume that you remain in your current job. It gives you a very good indication of your future benefits, and it helps with your retirement planning. So here's a shot of what the modeler can look like. So here we've got somebody who's in Alpha and Nuvos wanting to take their pension early from the Alpha scheme and at the normal pension age for Nuvos. So they've moved the sliding scale here to pick the age, and it's adjusted the pension accordingly. So retiring early from any of the schemes, the modeler will automatically apply the reduction to it. It is showing a lump sum of 0, and that's because both with Nuvos and Alpha, there's no automatic lump sum, but you can exchange some of your pension in order to access that lump sum. So you can then look at moving the sliding scale for the lump sum. That will calculate the maximum that you can have tax-free and will reduce your pension accordingly based on the figures that you have there. You can see here, as this person is in Nuvos and in Alpha, under the green blocks where it's calculating your options, it will split out. This is so much from that scheme and that's so much from the other scheme. So if you do decide to not take everything at the same time, then you can see the impact of those decisions. Now, limitations of the modeler so far. So it doesn't include the 2015 remedy. So the remedy options will be included on your statements next year. So therefore, you will be able to pull that information through from your statements to the modeler. But remember that there is a McLeod calculator that will be updated in extreme detail over the next few weeks. It doesn't work if you leave the scheme without retiring. It can't predict the future inflation / pay rises, because it then would start to become rather unrealistic. And there's some other scenarios not covered. So, for example, if you've gone through a divorce and there's an earmarking order on your pension benefits, and that won't be included in there. There are, of course, options in how you can increase how your Alpha pension benefit is building up. And there's 3 different options. 2 will directly impact your Alpha pension, and we'll have a look at an example calculation of one of those in a moment. So the first option is the Civil Service additional voluntary contributions. So this is where you can make contributions over to Legal and General, who are the current provider. And this exists on an investment basis. So you will get tax relief on those contributions. You would need to choose where those contributions were to be invested. And because it's based on the market conditions, there's a lot of flexibility around this one. So you can stop and start those contributions when you want. You can change the rates that you're paying, and you can also change where that money is invested. So with that, it allows you to remain in Alpha, but to use that AVCs as almost a side pot to gain you additional cash benefit. So you could look into taking it all, for example, as a lump sum. 25% of that would be tax-free. The rest would be taxable. The next option, and this would directly impact your Alpha pension, is an EPA. So this is where you're able to make monthly contributions that would start from the 1st of April. And this will impact the pension that you're building up in alpha from the point that you pay it. So for example, if you start on the 1st of April 2024, you could do an EPA that would allow you to access your pension, let's use an example of 2 years early, either without a reduction or with less of a reduction. So if you wanted to take it at 65, for example, and you did a -2 EPA, that part of your alpha pension would not be reduced for you accessing it early because you've paid towards that EPA. You could always look at taking it, for example, 7 years early, and if you did a -2 EPA, that just means that there would be a reduction for you taking it 5 years early. But bear in mind, it will affect the pension that you're building up whilst you're making those contributions. So if you start it from the 1st of April 24, it won't touch the pension you've built up before that. There is a calculator available on the Civil Service Pension Scheme website, so you can look then at how that would impact your pension and allow you to make those decisions. And the next option is added pension. So this is as it says in the name. It allows you to build up extra pension on alpha on top of what you're getting by just being in work and earning a salary. So again, there's a calculator on the website, and the rates for that are very specific to you as an individual and the information that you put in the calculator. So you can start this from the 1st of April each year for regular contributions, or you can look into doing a lump sum within the current scheme year. So deadlines for getting forms in, for getting lump sum payments in, are generally between December and March, and there's always more information on the website, as well as your employer should be publicising that information. But just to give you some examples of how added pension can work, and you can pay for contributions to build up extra pension for you, but also for your dependents as well, and that would impact your lump sum calculation. So here we've got, and this is all information put in on the calculator, so we've got a 20-year-old would have to pay £54 a month to accrue an additional pension of £5,000 per year, so that's on top of their normal alpha build-up. Then we've got a 35-year-old would have to pay £147 a month to accrue an additional pension of £7,000 a year. And a 55-year-old would have to pay £361 a month to accrue an additional £4,000 per year. So you can see the differences there and what's having an impact on those calculations. So I'd encourage you to go and have a look at the calculator on the website. So at least you're then making some positive action. And you may look in there and go, well, actually, yep, I can afford to do that. And remember, you can always build that up and make changes each April. And you might be thinking, yeah, I can't do that now, but I might want to do it further down the line. But rather than just assuming that it's not for you, go and take that positive action, and then you're in control of your retirement planning. You can do a combination of added pension and EPA, and there are restrictions around how much you can pay. And that information is also on the website. So we've had a look at the slides before where these figures came up, and since we showed you them, we've looked at your annual statement, we've looked at what you can do when it comes to your pension planning. So now we want to encourage you to have a look at putting all those pieces together. So it doesn't matter how far away retirement is, have an idea of what you would like from it. So look at your income, use the modeler, and compare it to these retirement living standards. But bear in mind that each figure on there is going to be different for each person. The intention is just to give you an idea. You might already be showing on the modeler that you've got enough income for your retirement, and that's great. You still might want to look into paying additional contributions so you can just push your retirement options that little bit further. So everyone's got that option. Remember, you can always buy added pension, or you can always do EPA through regular contributions, or you can do added pension by way of a lump sum. It's a good idea to set yourself a reminder in your calendar for the new year to ensure that you don't leave yourself with no time to get that paperwork in and then wait until the next deadline. Remember though, the AVCs, so that's the money purchase pot, that can be started at any time. So that could be an option to look at boosting that additional lump sum that you could take. So other actions to consider, we've been through everything. Hopefully that's got your mind thinking, actually, yeah, now I'm going to go and have a look at this and I want to start taking control of my retirement options again, regardless of how far away that is. So the scheme website has an awful lot of information on there. So this is the area of the website where you don't need to sign in, so anybody can access it, and it holds an awful lot of information. There's a search facility in the top right hand corner, really useful to drill down to the areas that you want to look into more. I would encourage you to get used to navigating around there. You'll probably find that it answers a lot of your questions that you may have, as the information's there and really useful. If you haven't already, then register for the pension portal. So that's where you get your annual statements. That's where you can have a look at the retirement modeler. And if you're affected by the McLeod judgment, then we can see how it's affected you on there. Attend a pension power session. We run these daily and often 2 or 3 times a day. These sessions are aimed at helping you understand your options when it comes to the pension scheme and how things may be affecting you. You can listen to a live presenter like one of us, and you can ask questions. And as Catherine said before, the smaller groups on there, so you can get your question addressed before the end of the session. Listen to the pension podcast. So I think last time that we were informed of the stats, it was over 35,000 people had listened to that podcast. It literally is extremely interesting. It's just real people having a conversation to pass on thoughts and ideas just to help you understand your pension. And start looking at making your retirement plan. So this is all towards getting everything ready rather than leaving it till the last minute. So you know what you're working with, you know what your plans might be. So it might be traveling the world, it might be looking after family. But start getting everything in place so that you're not leaving it to the last minute, and then you know what you're working with and you know what you're aiming for. But that's it from me. Thank you very much, and I will pass back to Catherine.
Thank you, Michelle. That was great. Lots of useful information to absorb and digest there. So we're going to run through some of your questions now. So we've had lots of questions that are still coming in, so thank you very much. We're going to get through as many of these as we possibly can. So let me just have a little look and see what's been most upvoted so far. So Liliana, I'll come to you with the first question. So this is from Anonymous. I understand that you can claim back your widows and orphans contributions upon retirement, but there's no mention of this anywhere. Could this be explained, please? So Lil, can you give us a run through of what that is and who it applies to?
Thank you, Catherine, and really good question. So the widows and orphans contribution refunds are still payable if you're single, divorced, or widowed upon retirement. So when you get your retirement documents, we're going to ask what your marital status is at that point, and then we would make the calculation and pay that refund if it is due to you. So it's absolutely still payable as long as you're eligible. So I hope that helps, and I'll pass it back to Catherine.
Thank you, Lil. Yeah, that's great. So yeah, widows and orphans, a common question from some of our classic members. So let's have a look at our next question. I have a preserved classic pension as well as current alpha. I'm still working. Is my classic pension increasing? So Michelle, could you give us a run through of how that would work, please?
Yeah, great question. I'm sure that covers for a lot of people. So you've used the term preserved pension, which would suggest that you've left the civil service at some point. So your pension would no longer be going up linked to your service or your salary, but it would carry on going up by inflation each year. So it will go up by consumer price index until you decide to take it. So you can ask for an up-to-date value by contacting us using the Contact Us form that Liliana referenced earlier on in the presentation, and we can give you information about the value of that. But yes, it's still going up by inflation.
Thank you, Michelle. Our next most upvoted question. So something we get asked about quite a lot. People are looking for the best time of year when they should claim their pension benefits. So is it better to retire at the beginning of the tax year or wait until your birthday? I have heard that any payments after April are not counted. Not quite sure what the member means by that, but not sure. So Liliana, can you give us a rundown of what happens when someone puts their pension into payment and annual inflation adjustments and those kind of things, please?
Yeah, very good question. So in terms of when you retire, of course, that's going to be personal to your circumstances. So if you do retire partway through a year, any increase to your pension would be prorated accordingly. So yeah, it just depends on when you want to leave service. yeah, there's not a single answer for everybody. Everybody's circumstances are different, so it's what works best for you. But again, if you do retire partway through the year, the next April you would get a prorated increase to your pension based on your last day of service. So I hope that helps, and I'll pass it back to Catherine.
Thanks, Lil. Yeah, we get a lot of people thinking they can almost cheat the system a little bit, maybe by, say, retiring at the end of March, and then the first inflation adjustments applied just after the 6th of April. But like Lil said, it is a prorated inflation adjustment in your first year of retirement. So it's not a case of you can get a larger increase based on when you retire. It's all, you know, done fairly, basically, based on the scheme rules. Okay, so we've got a question here. How long does it usually take to process your pension before retirement? I've heard of people having to wait for 6 months. So Michelle, could you give us a run through of the retirement process and how long needs to be provided as notice, please?
Great, thank you very much. Yeah, so when it comes to your retirement, we ordinarily ask for 4 months notice, and that would come through from your employer because you're saying that you want to retire fully or partial retire. And what would happen is then that we go through every piece of data on your record that affects the calculation. And we would look for missing information, because remember, this all comes through from your employer. We'd look for anything where, let's say, there was a sudden change and we've got new information to back that up. We would then enter into a formal process with your employer to look at that data. They would then need to go through and provide any answers, information, or provide the missing information to us. We would then aim to get the quotation out to you 2 months prior to your retirement date. That gives you time to look at your options and decide what's best for you. We would say ordinarily get the forms back to us a month prior to your retirement date, and that allows us to get everything in place and get everything paid for you. We would then look to pay your lump sum, if that's what you chose, within a couple of days of your retirement date, and then your pension is always paid in arrears. So that would then be backdated. So let's say you chose a retirement date of the 14th of November. It would then be paid actually on the 14th of December in arrears, and would be paid on the 14th of every month after that. So we would ordinarily, as I say, ask for a 4 months notice period, but there is a lot of work going in between that to make sure that we get out accurate information to you, and that can sometimes take some time. But we've not heard of anything around any delays going on like that. So work with that, but your employer may have a slightly different one. We are aware of some that say 5 or 6 months beforehand, but the 4 months is the Cabinet Office agreed timescale. Hopefully that helps and gives you some confidence in your planning.
Thank you, Michelle. Yeah, it's always good to know you do have to give that minimum of 4 months notice to make sure we've got the appropriate timescales to get everything in done to protect your pension and lump sum being paid on your chosen retirement date. Okay, so our next question comes from Anonymous, and this is for you, Liliana. So I'd like to retire at 60 and take my classic pension. Can I then take my alpha at age 67?
Yeah, very good question. And the short answer is yes. So Classic and Alpha are separate pension schemes. Of course, they're all coming from the same place, but you are able to take your benefits separately. So lots of people are choosing to take their Classic at 60 and wait till later to take less or no reduction on the Alpha pension. So when you do decide to leave service, you will get either a retirement quotation or a statement of benefits to show you what you've got so far. And then when you do decide to claim your pension, you can take the benefits separately, or you can have everything paid at the same time. So again, if you do choose to take your pension early, it will be reduced. So if you take Alpha before your state pension age, it would be reduced. Likewise, if you took Classic Premium or Classic Plus before 60, it would be reduced as well. So again, when you do decide to leave service, you'll get your statement and your options, and you can make it at that point. So I hope that helps.
Thank you, Liliana. That's great. Such a common question that we get all the time from people who don't necessarily want to take both sets of pension benefits at the same time. So I'll come to Michelle for our next question. We've got a member who's going to be 60 next year and intends to apply for partial retirement. They've asked, in addition to taking the classic pension and lump sum, can I take a lump sum from Alpha but not take the Alpha pension element and let that accrue until 67 or until when I decide to take it? So if you could explain the options a member would have in that scenario, please.
Yeah, absolutely. Great question. I'm sure there's a lot of people thinking the same thing. So yes, in addition, you can take your classic and lump sum, but remember pension as well. But remember that when you take a lump sum, it is linked to your pension. So you can't take your alpha lump sum, but not the pension, because it's all calculated off what you're taking. They come hand in hand. So if you did decide to take your alpha early, remember on partial retirement, as you would carry on working, earning a salary from the civil service, you would carry on having contributions deducted. So you will build up another alpha pension benefit and given the option of taking that. So your choices are, you don't have to take your alpha at the same time that you are taking your classic. You could leave that building up, or you could look to taking that. It would be reduced for you accessing it early. And then in addition, you would have the additional benefits that you've built up since then. So lots of options, but bear in mind, you do still need to take into account partial retirement. You've got to reduce your earnings enough, so at least by 20%, reducing your hours or downgrading. So you've got things like that to take into account, but your pension and lump sum come hand in hand.
Thanks for that, Michelle. That's great. I'm just going to skip down a couple of questions and continue on the theme of partial retirement, as we're getting quite a few questions about that. So a question has popped up here about the issue of abatement, which is something that members ask us about all the time. So members asked, if I partially retire and part of my classic pension has abatement included, does that mean I lose part of the pension pot that I've built up, or does it mean that it is stored for payment when full retirement is taken? So Liliana, could you pick up what abatement actually is, please, and then explain the answer to that for us?
Yeah, great question. Abatement is a big hot topic when it comes to partial retirement. And what abatement is, it's a reduction to your pension if the pension you're taking plus your new earnings exceed what's called your salary of reference, which is more or less what you were earning prior to partial retirement. So if you are abated, that money is therefore forfeited while you're in service. So you don't lose the pension forever, but if you're over the salary of reference, so again, if you're over the earnings you had before partial retirement, any excess is abated, and there's not a backdated pay of abatement or anything like that. It would go back up once you do fully leave service or if you change your hours. But again, it's a mechanism to, again, if your pension plus your new earnings exceed what you were earning before, that is in a sense, it's abated. That's literally what it is. So I hope that helps. And back to you, Catherine.
Thank you, Liliana. Yeah, that's really helpful. Just a shout out there as well, just to say there is a guide called What is Abatement available on the Civil Service Pension Scheme website. So if you do have questions about that, then that's a really good source of information just to give you a bit more help and guidance on that particular topic. The next question we have, I'll just pick up myself quickly. So someone's asked, are the retirement living standards amounts inclusive of state pension? So yes, so the retirement living standards gives you a guide of the total amount of income that you need in retirement. It's not sort of stipulating where that comes from. Of course, some people might not have entitlement to the full state pension because they might not have worked for all of their working life. They might have worked overseas, for example. So lots of different things that need to be considered. So it's a total source of income, wherever that comes from, of course, is up to your individual circumstances. And the levels that are provided by the Pension and Lifetime Saving Association, who put those together, are adjusted annually in line with inflation. So they are taking into account the rates of inflation that we have at the moment. So do bear that in mind. Okay, so next question I will come to Michelle, and this is about the calculation of alpha benefits. So there are 2 percentage rates quoted for the alpha scheme. 2.32% accrual rate, which I understand is the percentage of my pensionable earnings which my pension will accrue each year. However, employer contributions are 26.6%. I see this going out on my payslip every month as over £500. Where does this money go, as it's not reflected in the balance of my pension pot? Really common question. We're not covering the calculation of alpha today. It was covered in yesterday's session, which you can watch back if you want to. But Michelle, if you could just give us a brief run through of how alpha works, that'd be great.
Great, yeah, and as Catherine said, it's a question that we do get asked a lot. So with a defined benefit scheme, your pension builds up based on your salary and the fact that you are employed. It's not directly linked to the contributions that you pay. But what happens to them, really importantly, is they go to a ring-fenced area of the Cabinet Office's finances along with your employer contributions, and they're used to make sure that there's money there to pay out your pension benefits. So your employer contributions are some of the highest in the public sector. And yes, you'll see them coming out, but you don't actually have a pot that belongs to you with those contributions in there. And what we find is that in retirement, after about 2, 3, 4 years, if you look back at how much contributions you paid versus the pension that you are receiving, and the fact that that will be paid for the rest of your life, going up by inflation, and also for any dependents as well, then it massively outweighs how much you paid in. So although it's not directly impacting your pension, it means that we can calculate it as we do, because we know that there is money there to pay out those pension benefits. So you see things in the private sector around investments and that all affecting that. This money literally sits there to make sure there is something there to pay yours and your dependents' pensions out for as long as you need them for the rest of your life. I hope that's cleared it up. It is a question that comes up quite a lot, and completely understand why. But thank you very much for that.
Thank you, Michelle. Yeah, it is. It's a really common question. There's lots of misunderstanding around how the benefits in alpha are calculated, and comparing those to the contribution rates that are paid. Just worth mentioning at this point, so the accrual rate in alpha at 2.32% is the most generous of all of the civil service pension schemes that have existed over time. So the accrual rate, sorry, in classic, for example, was 1/80th. So a member would get 1/80th of their earnings each year as annual pension. In premium, it was 1/60th. If you turn that 2.32% from alpha into a fraction, it's around 1/43rd. So you're actually getting almost double the pension each year in alpha that you were in the classic scheme. So just worth bearing that in mind. And it's interesting that because alpha is reflected as a percentage, we get asked that question quite a lot, but no one ever asks the same question about the final salary schemes, because they're presented as a fraction rather than as a percentage, and people don't seem to put the two of those together. Alpha is actually the most generous of all of those accrual rates. So just a little interesting fact for you all there. Okay, so let's get back to your questions. We've got a member who said, I'm reducing my hours next year and retiring in 5 years at age 60. Which salary will my classic pension be calculated on? My actual part-time salary or my full-time equivalent? So classic pension benefits, and indeed for all of our final salary schemes, so this applies for premium and classic plus as well, those benefits are always calculated based on your full-time equivalent salary. So your part-time salary is always ignored in those calculations. So something that maybe takes some comfort if you are reducing your hours to part-time, that's not going to impact the pension benefits that you've already built up in your final salary scheme. It will of course impact the calculation of your alpha pension benefits, as they're based on your actual earnings, so it won't impact what you've already accrued in alpha. That is protected, but anything you accrue going forward is accruing at 2.32% of your earnings, and it's based on your actual earnings in alpha. What is our next most upvoted question? So we've got two that are quite similar actually. So I've heard it mentioned that alpha is reduced by about 4 or 5% per year if taken early. What dictates whether it's 4 or 5%? And the next question, if I retire at 55, will my alpha pension be reduced by approximately 48%, which is 4% multiplied by the 12 years we're taking it early? So Liliana, some information on taking alpha pension benefits early, please.
Yeah, thank you for that question. It's a really good question. So in terms of the reduction to your pension, it is approximately 4 to 5%. We do say that just to give people a little bit of a ballpark figure to work with. But what I can say is the reduction does taper off the earlier you go. So it's a really good, useful tool to use the modeler, because the modeler does project your benefits to the specified age. So if you are putting in an age that's earlier than your normal pension age, it does take into account any reduction factors that would occur on that. So yes, it is approximately 4 to 5%, but if you want an accurate estimation, the modeler is a really good, useful tool. So I hope that helps.
Thank you, Lil. Yeah, we get lots of questions about that as well. So if you're really interested in taking that down to sort of granular detail, you will find the actuarial reduction factors available on the Civil Service Pension Scheme website. If you really want to look at that and do some sums yourself, then you can find those online and do that. But of course, it's much easier to do, as Lil says, and use the retirement modeler and just let that do all the work for you, which is nice and simple. Okay, so let's have a look at our next question. Let's have a look. So a question on state pensions. So do you get a reduced state pension if you were in the civil service pension scheme? So Michelle, could you give us some information on how that works, please?
Yeah, great question, and something that's appearing quite a lot recently. So what you're referring to is a lot of schemes were what was called contracted out of the state second pension. That includes the civil service pension and pretty much every final salary scheme that's ever existed. And as a result of contracted out, so the scheme decided that it wasn't down at a member level, you were therefore contracted out. So you were paying reduced national insurance contributions. So that could have an impact on whether you've reached the maximum for your national insurance contributions to get the full state pension. So what you would just need to do is go and have a look on the government gateway. So if you sign in, you'll need your national insurance number, and be warned that they will give you a code that you will need to keep to sign in every time. And you could have a look at your state pension forecast. So I did mine in January, and it said based on this previous tax year, this is what you've paid and this is what your state pension would be, because I was also affected from a previous scheme of contracted out. It showed me, though, that if I carried on paying for the next few years, that I would be entitled to the full amount. And I could also see my complete national insurance contribution history. So it's worth signing into that gateway. So it's a government gateway to have a look at your specific state pension forecast and see if you are directly affected by that. It's not the same for everybody because you may have paid enough. So it's 35 years at full rate. So that'd be prorated across, of course. So do have a look at that and see if you are affected by it. In an additional piece of information, what the scheme has to do is make sure that if there is any shortfall for that period, that it's covered by your civil service pension. So it may mean that your payment from the state pension is less than what you were expecting, but your civil service pension has to cover that amount. That doesn't mean that will be increased. It means it's included in the calculations that we do. Hopefully that wasn't too technical, but definitely please do sign into the government gateway to have a look. I recommend that everybody does that.
Thank you, Michelle. Yeah, definitely worthwhile taking some time to do that. It just helps you put all the pieces together for planning your retirement as well. If you know how much you're expecting from your state pension and your civil service pension, and of course any other pension benefits you might have from other sources. So keeping on top of that is a really key thing when it comes to planning for the future and for your retirement. Okay, so other questions we've had in, I think there are a few of these that we've already covered that are the most upvoted questions at the moment. I'm now part-time. Is my final salary calculation based on my full salary or prorated? So we've already answered that that is based on your full-time equivalent salary when it comes to your final salary benefits. Why do I pay 4% but only get 2.32% back? So we've already talked about that as well. Michelle gave us an explanation of how alpha works and how the contributions that are paid aren't actually directly linked to what you're going to get back. It's the 2.32%. And we've also pointed out as well that you tend to get back every penny that you've paid in within about 2 years of claiming your pension at retirement. Or if you take the maximum tax-free lump sum of it available at retirement, you'll get back every penny that you've paid in that one singular lump sum, with all of your pension benefits throughout your retirement being financed by those employer contributions. So you're paying that 4.6% once, but you're getting that 2.32% back every single year in retirement, which hopefully is going to be a really long time because you're going to live a nice, long, happy and healthy retirement. Our next question then, so if I leave the civil service before retirement age, how can I work out what my pension would be? So what does a member receive if they leave before retirement age, Lil? And what information can they get in the future from us as well?
Yeah, great question. So if you leave before your normal pension age, you're going to get a statement of all of the benefits that you've accrued up to your last day of service. So if you've got access to the pension portal, you will be able to access your benefit statements on there going forward as well. So if you leave the service before taking your pension, the benefits that you've accrued so far will still stand and you'll have that pension to take. And yeah, the only thing that will change is the inflation. So the pension will retain its value over time. So you'll be able to see a statement on what your pension looks like year on year, but generally speaking, when you leave service, you'll have a statement of your benefits and that's what you'll have for your retirement. So I hope that helps and I'll pass it back to Catherine.
Thank you, Lil. Yeah, that's great. So you'll be given that statement when you leave with the value of your pension benefits, and you'll still have access to the pension portal as well on leaving. That's been in place since 2022. Members who've left from summer 2022 onwards still have access to the pension portal once they've left, and something that's been we plan on rolling out to all deferred members in the future as well. That's in development at the moment. We've got a couple of questions around lump sums and tax-free lump sums for you, Michelle. So I'll give you both of the questions. The first one is, what is the maximum tax-free amount that can be taken? And the next one is, civil service pension state lump sums are usually tax-free. What circumstances, if any, could prevent it from being tax-free? So Michelle, could you give us some info on how that all works, please?
Yeah, both great questions, and something that we get asked quite a lot, because of course you want to understand the impact on your decisions you're making. So the maximum you can have as a tax-free lump sum, it's not a set figure, it's 25% of the value of your pension. So the calculations that we do will always be in those parameters. So we're offering you the maximum that you can have as a lump sum. So on to the question where it says they're usually tax-free, what circumstances would prevent it from being tax-free? You may have heard of something called the lifetime allowance. So it was referenced in the recent budget, and they said they were abolishing it. They have done for a certain extent, but what we need to make sure when you do get your retirement paperwork is that the lump sums that you're getting from all of your pension schemes at that time don't take you above the 25% of the lifetime allowance. So you'll be given all that information, and we'll ask you for details around what you're getting from elsewhere. But ordinarily, it would mean that everything's tax-free unless you give us information that would exceed that. And then, of course, we'd need to go down different avenues. Trying to not get too technical, but that's normally what would impact whether it would be tax-free or not. For the majority of people, it's not an issue, but it's something that we do need to check in the paperwork we send out to you. Hopefully that's cleared it up.
Thank you, Michelle. That's great. Our next most voted question, I think we've already answered. How long does it take you to process a partial retirement request? So we've talked about the 4 months notice that the scheme asks for. Your employer could ask for slightly longer, so do check your department's procedure as well and how much notice they ask for. With taking partial retirement, of course, you've got to have an agreement from your employer to reduce your earnings, which most people do by reducing the number of hours per week that they work, and that process could take some time as well, depending on your department and how willing they are to accept the change that you've proposed. So you do need to build in time to have that negotiation if it's required as well. Our next question, I think it's really more of a statement than a question. If I went part-time later this year, not partial retirement, I don't propose taking any pensions yet. The alpha will increase, albeit at a slower rate. The premium will be assessed as the full-time rate based on my situation of the end of premium. If you could just maybe, Lil, give us some information about how it would work for that member with the final salary for premium and how the alpha would accrue as well, please.
Yeah, so I think you've kind of answered the question within there. You're right, where your premium classic and classic plus pensions are still final salary linked. So going part-time isn't going to affect your pay because we do use the full-time equivalent for your pension calculations. Yeah, and in terms of your alpha pension, as you said, you're going to accrue it at a slightly lower rate because you're going part-time, you're going to be earning less, and the actual pension that you're accruing is based on your actual earnings. So, of course, going part-time will affect any alpha accrual going forward. But again, for any final salary pension, the final salary link still stands, and we calculate your pension at your last day of service. So I hope that helps, and I'll pass it back to Catherine.
Thank you, Lil. Yeah, so that's great. So yeah, member pretty much answered their own question there, but just to make sure everything was understood. So our next question, if I retired at the age of 57, could I receive my premium and alpha pension at the same time? So I'll just give you a quick answer to that one. The answer is yes. I think we've probably covered that off already. You're able to claim your pension benefits early on a reduced basis. Retiring at 57, your premium would be reduced for taking it 3 years early. It's payable at age 60. Your alpha, depending on your state pension age, it could be 9, 10 or 11 years, depending on what your state pension age is. So you can take both sets of pension benefits early at the same time, and different reductions would be applied to each to take into account the normal pension ages for each. Michelle, next we've got a question from a member. If I retired abroad, will I be able to receive my pension in pounds and not in the currency where I will be living? So can you give an explanation of how that would work for a member, please?
So we can see already that you're thinking of going off to sunnier climes, and I don't blame you based on the weather today. But essentially we'll pay the money to the bank account that you tell us to. So if it's an account that will accept it in sterling, then that's where it will go to, and then it depends on then how you're going to be accessing it. So it depends, as I say, based on the account where that money is going to be paid to.
Thank you, Michelle. Yeah, we do pay to I think about at least 75 different countries around the world, so that is an option, but of course you can still have your pension paid into a UK bank account even if you're not in the country, so that's an option for you. Our next most upvoted question from Andrew: how do overtime earnings impact on your pension for the 2 years prior to retirement? I'm not sure why the 2 years would be relevant, but Liliana, could you give us some information on how overtime could impact a member's pension, although albeit it's not always necessarily straightforward, is it?
Yeah, very good question. So in terms of overtime, it's not usually pensionable. However, I will caveat and say that it's based on your contract with your employer. So again, from our experience, overtime is not usually pensionable. So obviously you'll be earning that money. But again, it doesn't usually count towards your pension. So again, we do our calculations based on what your employer supplies to us. So if you ever have a question over what's pensionable or not, you can ask us to ask your employer on your behalf, or you can go directly to your employer yourself and ask if that element would be pensionable for your circumstances. So I hope that's helped, and I will pass it back to Catherine.
Thank you, Lil. Yep, we get lots of questions about overtime, but it does vary greatly from department to department, so do check in with your payroll team if you need to. So I think that's all of the questions we've got time for today. We're fastly running out of time, so thank you very much everybody for joining us today. Hope you found today's session useful. Might be joining us later in the week for more of our sessions. We will be sending out a feedback survey later on this afternoon. Do please take some time to complete that and let us know how you found your session. Let us know what we can improve and what you'd like to see more of, and we do take that into account when we're planning our future sessions. Sorry if we didn't get to your question today. We have had hundreds of them submitted throughout the hour. Don't forget that you can attend a Pension Power session, which you can book online at any point, and you will get your questions answered if you attend one of those sessions for us. So again, thank you very much everybody for joining us today. Have a great rest of the day, and bye for now.